Why retirement savings seem impossible. The last chapter of the American dream is retirement. However, the dream of the golden years is rapidly becoming a fairy tale. The CEO and president of Transamerica Center for Retirement Studies, Collinson, said that retiring nowadays in America is not simple and that it is like climbing a really steep mountain. Today, more than a third of Americans feel unprepared or unclear about their retirement plans. And over a third of senior citizens say either they intend to work until they are 70 or never retire. So, is there a retirement crisis in America? If so, is it possible to stop it? Hello there, this is the Financial Fortune, and in this video, we will answer the question, why does retirement savings in America seem impossible? Before we begin, please don't forget to leave a like, click subscribe if you haven't already, and hit the notification bell to be notified whenever we release new videos. Let me introduce to you Juanita Dikes. Juanita Dikes has been retired for 6 years and living in rural Retreat, Virginia. She worked in factories her entire life despite having a number of jobs. Sadly, she disregarded advice from many who advised her to start saving for retirement. She believed that the government would pay for her and provide enough for her to live on, but she was wrong. She received $631 from her pension and $1,574 from Social Security. She pays all of her bills, including her auto loan, utility bills, insurance, and other expenses. She has no savings, and you may assume that she owes money to the bank. She doesn't have the funds to cover the check she writes. The extra money is then deducted from her next check. Americans do not have savings for their retirement. In 2022, people who were close to retiring had a median retirement account amount of $89,716. In terms of monthly retirement income, that comes to less than $500 over a 15-year period. Collinson noted that before 401ks were introduced and the option to save emerged, baby boomers were already well into their mid-40s. The expectation was Social Security and traditional pensions when they started working. The regulations have changed now that they are approaching retirement, and it is expected that they would have saved more over the years. Dykes said that her most recent employment was just like one in a factory. They were compensated, that's all. No more nothing at all. They had no paid time off, vacation, or anything else. They just worked. The other issue, according to Ree, is that retirement savings program experienced significant leakage during economic downturns. Pensions and Social Security, on the other hand, are locked boxes. No matter what, nobody touches that money. They can use that in the future. IRAs and 401ks are frequently used to cover medical expenditures, unemployment, and other expenses. Collinson presented their own study on retirees and revealed that retirees are doing pretty well. However, they lack the financial capacity to withstand a significant financial shock, and the expense of long-term care services and support a significant example of it. They simply lack the financial resources to be able to finance it if they experience a catastrophic health emergency or require long-term care. 1 in 5 Americans aged 65 and older reported having more than $2,000 out of pocket for medical care. According to different research, more than a third of Americans over 65 fear that they won't be able to afford healthcare services in the coming year. Dykes said that if she visits a normal doctor, it is covered, but when it comes to a specialist, that would cost $30. She had an appointment once with a specialist, but she had no funds to visit, so she was forced to call and reschedule. More retirees will likely exceed their retirement savings as a result of higher life expectancy. Men live 8.3 years longer than their retirement funds can support, while women live 10.9 years longer according to a World Economic Forum analysis. The situation for younger generations is not any better. In America, 25% of non-retired adults have no retirement savings at all. Many people don't have access to, or at least don't consistently have access to, an employer-sponsored retirement plan, according to Anchi Chen, a research economist at Boston College Center for Retirement Research. Their behavioral science study indicates that people don't simply walk into a bank and seek to open an IRA. Workers under 25 had a saving rate of 8%, well below the advised total saving rate of 15%. Workers aged 25 to 34 had an average total saving rate of 10.50%. Collinson went on to say to also consider the shifting environment, particularly millennials and Gen Z. They are entering the workforce with college loan debt, which is unheard of for previous generations. Younger generations are also affected by the fact that they will frequently change occupation throughout their careers and engage in self-employment. They will therefore need to manage their savings and investments considerably more actively and independently, making sure that they have enough money saved for their retirement and for the rest of their lives. Dikes has thought about returning to work, but she can stand for very long periods of time because she had a knee replacement 2 years ago and the other one is trying to tell her it's about time for one. If they don't get this social security issue resolved so they have enough money to live on, she might have to though. The Social Security Administration predicted in 2022 that without congressional action, their reserve would run out by 2034, endangering Social Security benefits. According to Ree, Social Security accrued a significant surplus in the 1970s and 1980s as a result of demographic changes and is currently in the process of exhausting that surplus. Retirees will begin receiving 78% of their benefits once they are depleted. It's not the end of the world and Social Security is not in any way insolvent, but it does imply that payments will be significantly reduced, which will negatively affect people, particularly those at the bottom and even those in the middle. The greatest disruptive factor to retirement has been inflation. Due to rising consumer expenditures, a quarter of Americans are anticipated to postpone retirement. We continue that market downturns are actually the worst for people who are ready to retire because that represents a significant loss to them rather than something that they can recoup over time. When adjusted for inflation, $1 million in a retirement account from 2 years ago is worth $120,000 less today. Inflation harms a person's retirement and fixed income tremendously, and Americans suddenly experience very significant inflation, especially in the areas that matter to people, namely food and fuel, after experiencing decades of relatively low inflation. Dykes said she is just like everyone else. She occasionally enjoys a fine steak, but she is unable to purchase one due to her financial situation. She simply needs to purchase the necessities and then pray that she will have enough money remaining to cover her debts. Chen continued that the inflation in the United States is currently reaching levels not seen in a very long time. People are currently uncertain as to whether they are currently experiencing high inflation, rising inflation, or a long tail of pandemic's consequences. Consumption declines and resources are depleted as a result of an ongoing retirement issue, which could be harmful to the economy as a whole. According to Ree, many states have taken the issue of people experiencing financial hardship in retirement very seriously. They're worried that an increasing number of seniors will require assistance from programs like Medicaid, food stamps, and subsidized housing, all of which are in short supply. Collinson continued that the effect on families is a hidden issue that doesn't get as much debate. Elderly parents often turn to their adult children for help when they lack the resources to take care of themselves or when they can't afford long-term care. Collinson went on to say that boosting retirement plan coverage, ensuring that every employee has access to workplace retirement savings, is crucial to raising retirement security in the United States. To have the chance to save, invest, and grow their savings over their lifetimes, people need a retirement system that is completely inclusive. Future retirees will ultimately decide how to secure retirement today. Collinson provided tips on how to do so. Tip number 1. Do not get overwhelmed. When you got overwhelmed, you'll probably procrastinate, which means you are stuck, and that is counterproductive. Tip number 2. Create a retirement strategy. Maybe enjoy it a little. Put some numbers next to your idealized version of your life in the far future or in the near future if you are younger. Tip number 3. Begin formulating a plan. If you need assistance, get it. You can get assistance from financial experts with that. You must participate. You must acquire as much knowledge as you can. So it's up to you to be knowledgeable enough to ask the right questions and draw wise conclusions. This is your retirement we are talking about. Before we end this video, let me put out the advice of Juanita Dikes. You need to save. I know that when you're young, you think, I don't need to save. I'll do that next time. We'll do this whenever. Do it now because I'm telling you, you need to. If you plan on living any length of time, you need the extra money. That is it for today. This is the Financial Fortune, and thank you for watching.